It's Friday. Do you know how to find winning trades on a Friday? Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub with your Friday update for the 3rd of February. Hard to believe, but we got lots going on. The stock market's up about 1.2%, new highs, lots of things going on there. We're also going to be looking at 3 different stocks today. Genworth Financial, which we talked about a few days ago, several days ago. Gilead Sciences, Inc., and also Tenet Healthcare. And we'll look at the stocks and also looking at how to find winning trades. Lots going on in the marketplace. You've probably seen we've got gold taking a dive here today. Finally, we'll be talking about that, of course, and we'll be talking about the NASDAQ, the S&P 500, and also the dollar, which is actually higher today. It's kind of surprising for a lot of traders to see that. But let's go to our first market, and we go to our Market Club portfolio. And I've already set the portfolio up, so it's a midday update. It's going to be looking at Genworth Financial, first of all, plus 100, so we know the trend is up, of course. And we're going to look at the chart. Well, clearly, here's our signal to buy this stock at 738, currently trading at 914. Nice move up. Hasn't changed, plus 100. I think what's today? We're up, let's see, we're up 13.8% just on today alone. And this is a signal that we had in this market, so it looks very, very good on this area. So it looks like it can go higher. It's right out of the range. If we go back further and see how much this market's looked, let's just go for 1 year. And you can see we're actually seeing some really, it's a nice base we're building from right here. You can see we've been, let's scope this out even further. You can see that the monthly came in right here on April 18th, and that's in 2011. So it's been almost a year going down, and it's made that turn finally. So you can see it right there. This is why the long-term monthly trade triangles are so very, very important. So check that out. But let's go to the next market. The next market is the S&P 500. You can see our monthly trade triangle here on the 10th of January. We're the 3rd today, so it's about 3 weeks ago at 1292. The market's up today. Really nice big move up today. We're up actually 1.26%, but from the lows, I think we're in great shape. And let's just scope that in a little closer so you can get a better idea of where we're looking at. Yeah, 6 months would be good. Okay, so here we are. I think, generally speaking, the next move on this Marriott is going to be at the 1360 level. As you know, we've been targeting this market going up to, excuse me, the 1370 to 1380 level. I still think that's very much in the cards. If we close at this time today at these levels, it's going to be a very positive close for the weekend. Everyone's going to be feeling very good about things, and we're plus 100 on the trade triangles. Again, these trade triangles really keep you in the swing of things on the right side of the track, and that's the bottom line. You want to be on the right side. So going to our next market, which is just the reverse, of course, is the silver market, and this market is actually under a little bit of pressure. But I had let me just take this. These are Fibonacci numbers. We want to take those off here. And let's go a little closer in. So you can see we're seeing a little bit of profit taking, but not as much as seen in the gold market today. We're down actually about 0.89%. Nothing really to get too dramatic about, but it's certainly a negative. But if you go to the gold market, this is where all the interest is, of course, we'll just simply go to our next market, which is gold. And you can see gold is down actually over almost 1%, so it's a little further than gold. It looks to be on the defensive. This level here, right here with the PSAR, which is this little dot you see on the screen, that comes in today at 1723. Now we're 1739, so it's another $16 lower. Can it go down there? I would be a little bit concerned about that. If you look at where we closed last week, we closed actually on the 27th. We closed at 1738, and we're 1739, so we're practically unchanged for the week. That will cause a doji line, and I think that's something to be very, very concerned about. It usually is an indication that the market's topped out. As you know, we've been not so bullish on this market simply because of our monthly trade triangle. We've got a lot of flag. People say, well, you missed the move. Well, we didn't really miss the move, and I'll show you why. Because if you trade with our recommended way for trading gold, for shorter intermediate term traders, you would have gotten long right here at 1641. You would have gotten in and out of the market right here. You would have gotten in the market at 1713, and you would have your stops dramatically up towards these levels of 723. So even if you get stopped out, you'll still make a profit. So that's the way we recommend trading gold for most traders. So let's look at copper. Copper, we've said, is a very, very strong thing with follows the economy. And the economy with the stocks up today, obviously copper's up today. We're looking for this market to go back up to 4, probably higher. Very bullish, plus 100. The trend is your friend. As we say oftentimes here on MarketClub TV, you don't want to fight the market. You want to move with the market. That's a key thing. Always remember that. Don't fight the market, move with the market. So let's go to our next market. And the next market we're looking at is the crude oil. Now, crude oil, it's really kind of, I'm taking some of these off here, but the crude oil market's sort of really since, I would say, November, middle of November, it's really sort of gone sideways without any real change. Now, this could potentially be a huge energy base. Now, energy base, I mean something that's really building to propel this market much higher. The signals are not there yet, except for the long-term monthly trade triangle, which is positive. The weekly and the daily are negative, indicating a -70, so possibly an emerging trend to the downside, but clearly this market's going to close lower for the week. That's something to really pay attention to. How we do next week, and if this in fact does become a large energy field to propel prices higher, we'll have to just be a little bit more patient with that for the time being. So next market's the US dollar. And this is the US dollar against the euro, and we always like to throw this in. You got a plus 55 here, folks. So this is a trading range. As you can see, for the past 6 or 7 days, we've sort of gone sort of sideways, really no direction. Certainly the 132 level on the euro is a key level, as is the 130 level. So we've sort of been bopping between the 130 and the 132 level here for the last several days. It needs to be resolved, but longer term, it looks as though the trend is down from 139.69 basis our trade triangle. So let's go to our next market, and that's going to be the dollar index. Much the same picture there, a -55. It's a trading range. It looks as like we're trying to base out here. We have come from an oversold condition. We do have a positive divergence here, indicating a potential rally for the dollar index in the next several days. So let's see how that plays out. Now, looking at our next market, we're trying to go through a lot of markets today. This is the Reuters Jefferies CRB Commodity Index. It's plus 55 again. This is in a trading range, but our longer term is monthly is negative. Our weekly is positive, indicating this trading range scenario. And you can see really since the same amount of time, about the middle of December, late November rather, we've sort of just gone sideways between a very wide trading range. We need to get over, I thought when we moved over the 316 level, I thought we were on our way, but we need to do a little bit more work before we can truly say that we are in an inflationary environment. We're not there yet. So let's see how that plays out. And going on to one of our first stocks we're going to be talking about is Gilead Sciences, and our monthly kicked in right here. This is a daily chart we're looking at, and look at how beautiful this is. It kicked in at 42.98. We're currently 53.63, so it's about $11 profit in a relatively short period of time. This is since January 6th, so you're talking less than a month. You got $11 profit, which is about a 25% return on where you purchased this stock. And again, all of our trade triangles are positive. Can it come down a little bit? Yes, it can, but the reality is that the trend is your friend, and the trend is clearly up in this market. So let's take a look at our next market, and that's going to be symbol THC, Tenet Healthcare, and that's had a nice positive move up today. But look again, our trade triangles picked this up on the 24th of January at 530. It's currently at 586. It's about a 10% return, so not too shabby here in just a few days, but nonetheless, all of our trade triangles are positive. And this is where the trade triangles really shine, is that they can help you get in and out of the market. And I think that's the key thing to look at. And if you want to learn more about our trade triangles, you may want to consider one-on-one Market Club coaching. Just see what's right for you. It's a free consultation, and the call is free. What are you waiting for? Give us a call, 877-219-1482. Again, 877-219-1482. We're standing by and waiting for your call. It's a free call, and the consultation is free. And just see if one-on-one Market Club coaching is right for you. Hey, this is Adam Hewison. Have a great day trading. I'll be back tomorrow with a weekend update, and we'll be looking at how these markets close out the week and what's to look for in the coming week. Have a great trading day.